Your Highnesses, Your Excellencies, ladies and gentlemen, good morning. My name is Nasser Al-Tibi from Al Arabiya News Channel. I'm very privileged and honored to be moderating this panel of heavyweights. Heavyweights not only in terms of expertise and status, maybe weight as well in kilograms, but also in terms of oil production volume. We're probably talking here about 15 million barrels a day between those three gentlemen right here. His Excellency Khalid Al-Faleh, His Excellency Dr. Sultan Al-Jaber, and Mr. Patrick Pouyanné. Good morning, gentlemen. Thank you for being here. Energy and investment. Energy, as we all know, is a crucial requirement for our economies, our societies, and indeed for the survival and prosperity of humankind. The demand for energy will only continue to grow. This seems to be the consensus. Growing populations, digitization, electrification, these are all factors that point in that direction. Therefore, we need to invest today in order to meet the demand of tomorrow. But such investments are long-term investments, and here where it gets a bit tricky. Mounting uncertainties are complicating the financial viability of the major investments needed. There are growing uncertainties that are complicating many factors, originating, for example, on the supply side of tight oil production, as well from factors affecting demand in major consuming countries, stemming from climate change policies. In addition to that, electric vehicle proliferation and renewable energy deployment at lower costs. So, how do we know where to invest, in what to invest, and how much? And of course, the oil price volatility doesn't help in that. Your Excellency, Khalid Al-Faleh, at the beginning of the year, you flagged a red flag. It was a concern regarding the dearth of investments that are being deployed in the oil industry in the past 3 years, fearing a future supply crunch and a resultant price hike. We are seeing surveys that saying maybe this year we're going to get an upstream capex at $390 billion, and it will not go above $500 billion from now until the early 2020s. This is compared, ladies and gentlemen, to $750 billion on upstream capex in 2014. Is it true that investments are not recovering, Your Excellency, or does this mask the fact that companies today are now able to get more out of every dollar spent?
Thank you, Nasser, and Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullah wa as'adallah sabahakum jami'an. Good morning, ladies and gentlemen. Let me first express my appreciation and gratitude for the many friends and partners who are with us today. As we all know, these are difficult days. For us in the Kingdom of Saudi Arabia. We are going through a crisis of sort resulting from the very regrettable and abhorrent incident that took place in Turkey. Nobody in the Kingdom can justify it or explain it. And from the leadership on down, we're very upset about what has happened. And of course, the King has made it clear that there will be investigation, justice, and retribution to those responsible. But the Kingdom is in the midst of a historic transformation of unprecedented proportions. And the train has moved, and it has moved deliberately towards a transformation journey that will not be stopped. And those partners who are here with us today to continue that journey with us are certainly going to look back and find out how the lessons have been learned from the incident, but at the same time, how committed the Kingdom is to its partners that stay the course. And I want to express my appreciation to all of them, and in particular to the two gentlemen with me on the stage. Dr. Sultan Al-Jaber as a leader in the Emirates with ADNOC, with Mubadala, with many entities. Masdar has been partner to the kingdom, and we have done great things together, and we will continue to do great things together. And of course, the presence of many leaders here from the Emirates, I think, is testament to the unity between our two countries. And a global leader from the oil and gas industry is with us. Patrick Pouyanné is a friend and partner from many, many years. I was delighted last year to present him with the Executive of the Year award at the Oil and Money Conference in London, so well deserved. And he is showing his mettle and leadership and what Total stands for again by being with us. So moving on to your question, if I may, the energy was over-investing in the beginning part of this decade, and that's what caused the imbalance that brought the intervention of the OPEC Plus, led by Saudi Arabia and Russia, and we stepped in decisively, and we worked with 24 countries and brought confidence back. And it takes time for people to realize where the long-term trajectory of the industry is going to be. We believe we have achieved a significant part of bringing confidence and visibility of where the future is. And we've seen significant flows coming back. Certainly short oil, that is shale oil and tight oil, in the United States is not short of investment. We've seen the increased activity. We've seen the increased production coming out of the US. But even long cycle projects, the mega projects in offshore and onshore that require 5 to 7 years are slowly coming back. I think what's important for the industry to know is that there will always be producers working together to prevent the kind of volatility that threatened the future. And it's also important for us, leaders and stakeholders, to remind people that despite all of the exciting things we heard, for example, in the first panel about mobility, electric mobility, about renewables, and we're believers in those, that oil and gas will continue to occupy approximately 2/3 of the energy mix 3, 4, 5 decades from now.
That's a central role.
And this message is essential to driving investment back. And I hope my colleagues will agree that that's important, not just amongst companies, but amongst financial community and consumers as well.
His Excellency His Excellency Khalid Al-Faleh just mentioned shorter cycle projects and investments. Do you think these shorter cycle investment projects, Monsieur Pouyanné, does it smooth out the volatility maybe in the medium term, in the long term? What do you think? Or it makes it harder to go after those big ticket investments?
Yeah, I will answer to the question, but first of all, I would like to say that I'm quite happy to be here today in Riyadh and to have honored the invitation of His Excellency Khalid Al-Faleh. We have a 40-year-long relationship with Saudi Aramco. And I often say in my speeches that in this industry, we love to speak during conference about partnership, but we see what partnership means when you have difficult times. And this is when you really strengthen the partnership. And I'm honored to be here today in Riyadh. Answering to your questions, short cycles, yes, they know this. It's important, and I think you will see a company like Total, by the way, we will invest much more in 2019 in these short cycles because we have in our portfolios, we were obliged in 2015 to, I would say, diminish the number of projects and new infill wells we were drilling around the world, but all these resources are still there. And one of the order we gave in the company is, let's accelerate again. It helps to smooth the decline rate, in fact, in our fields, And so we will invest more in these short cycle projects, but also, by the way, in large projects. We have accumulated and we have on our plate 25 large giant projects to be sanctioned. And our strategy is to benefit from the fact that we still have a low-cost environment in this industry in order to launch a new wave of projects. So I think the industry will be more active and maybe not yet at the level of where we were spending money in 2014, 13, but it was too high maybe as well. But we will be more active because of course the price will influence us, in particular all these short cycle projects.
Dr. Sultan, from where you are at the helm at ADNOC, how do you see the energy landscape changing? And as such, what would be your energy outlook for the future?
Thank you, Nasser, for the question. And allow me first to start by expressing how appreciative and grateful I am for such a kind invitation and for enabling such a platform for us to have access to our dear colleagues, friends, and partners from the industry and from other different relevant industries. In addressing or in answering your question, I'd like to also address a narrative that has been promoted for some time by some, and that is we are reaching peak oil demand. To make it simple and short, we are far from being over when it comes to oil and gas. Oil and gas, and this is supported and equipped by real, robust data and fundamentals. Oil and gas will continue to play a pivotal role in advancing global economic growth. And as such, today, for example, oil just broke 100 million barrels per day. We will see an increase in oil production. The world will need at least another 10 million barrels in the next 2 decades. So you'll see major capex programs being deployed to help advance such projects to meet such demand in the very near future. As such, gas demand will grow by 40% by 2040. Petchem growth is strongest ever. It will grow by 60% by 2050. With these such indications, to us, being a major oil-producing nation, we only have one answer when it comes to market outlook. It is well-equipped and well-supported with real fundamentals, strong data, and a robust growth trajectory. So for us, the only thing we're going to do is expand our portfolio of investments, invest across the value chain of our business. We are going to expand our productions in upstream. We're expanding our productions in midstream, in gas mainly, and in the petrochemicals and refining.
We'll be discussing more your strategy because really we've seen a transformation, maybe a revolution at ADNOC in the last 3 years. But Your Excellency, Mr. Khaled, the UAE is talking about oil will continue to play a central role. You've mentioned that, but we've also seen, with regards to or in response to the changing energy landscape, we've seen the Saudi response, which is Vision 2030. And the target and the goal is to lessen the dependence of Saudi Arabia on oil. Therefore, will oil take a backseat in the Saudi economic strategy? How would you, from your strategy, look at questions, for example, increasing Saudi production capacity that you've recently mentioned from maybe 12 to 13 million barrels a day? How would you tackle this question?
Well, I've used in a previous talk the metaphor of an airplane. And the kingdom, if you look at its history over the last few decades, has continued to grow in size, but it has continued to rely on one engine. So we've been a one-engine economy with oil providing the predominant share of government revenues, exports, as well as the real contributor to GDP. And we're growing the economy and in such a way, which is the essence of Vision 2030, by creating additional engines to the economy. One engine, which is oil, is going to grow further. So nothing that we will do by creating these other sectors that Vision 2030 aims to create and will create should be taken away from the focus we continue to place and the opportunities we continue to see and the harvesting of those opportunities that we will do from oil. I see oil today as 100 million, as Dr. Sultan said. I see it easily reaching 120 million in 3 decades, easily, if not sooner. And I see a lot of decline in regions like the North Sea. We see it even in some OPEC countries where we've seen significant decline. Even shale requires a lot of spending and it exhibits fast decline. So ultimately, regions like the Kingdom, the Gulf in general with the UAE playing a central part is going to take more and more of a share of future oil demand. I would not rule out that the Kingdom's production, which has been 9 to 10 over the last decade or so, will be 1 million to 2 million higher. I think what we need to decide in Kingdom, and it depends on the global landscape of how energy is managed, is whether we continue to invest in the significant spare capacity of 2 million barrels that costs us.
Especially with all the talk recently that there is some fear about what is left from spare capacity.
Exactly, and I think we have demonstrated time and time again the importance of spare capacity. So for us, we see the value to the global community, but we also need to make sure that there is a supporting framework globally to enable us to utilize that spare capacity in a judicious way, and that would determine whether we invest in spare capacity. But investing in capacity and producing the capacity will continue to be done. I think in addition to oil, I will just say a few words about gas. The Kingdom is one of the most significant producers and consumers of gas. 50% of our energy mix in the Kingdom is gas, which is very, very significant. And we see it increasing. 70% of our utilities will be moving to gas, and the other 30% will be mostly renewables and nuclear. So gas, and then we're going global with gas. So Aramco has a mandate. They have explored the opportunities, and I would not be surprised in 2 to 3 years to see Aramco a significant investor, and hopefully in a few years after that, trader of global LNG, meeting the switch from coal to gas and utilities, and especially in developing Asia.
Maybe in the Arctic.
And the Arctic is certainly an opportunity that is close to being achieved, yes.
Mr. Pouyanné, decisions on where the energy markets are headed, what sort of path to follow, has led you at Total to start strategically positioning yourselves in natural gas, in the LNG space, in a new petrochemical plant here in Saudi Arabia. You just recently announced it, signings maybe later on, and also in renewables, and even stretching yourselves out into the power sector. What sort of company will Total be in 10, 15 years down the line?
Or in 10, 15 years, we will be an oil and gas company, but we will add also, I think, another business about low-carbon electricity. So the way we think to our future is just to look to the evolution of the market, you know. Oil market will grow, like Dr. Sultan said, but probably 1% as an average, you know, and you have disruption. So we concentrate our portfolio on oil, on what we call low break-even projects, which means that we love the Middle East region, you know, in Abu Dhabi, and unfortunately not in Saudi Arabia, maybe one day, because I'm convinced that the last drop of oil will come from the region, you know, and that's so low break-even oil. Then natural gas will grow more than 2%, and in particular, liquefied natural gas should grow by more than 5%. That's why we made a very strong move this year, becoming the #2 publicly traded company in the world in LNG, with 40 million tons. 10% of the world market share is in our hands. And so natural gas, of course, will, I tend to say, maybe more gas than oil, but again, oil is giving more profits than natural gas, let's be clear. Natural gas logistics are more expensive. And natural gas led us to look naturally to the value chain, because we strongly believe in integration of the value chain to electricity, which is growing by more than 2% worldwide. You know, the economy is more and more electrified, I would say. Batteries, energy storage is making big progress. We are also involved in that business. And you have more and more digital world. So we need to be embarked. And so we will produce electricity either from natural gas or from renewables, solar, for example, and also market it. And we have just recently acquired a portfolio of 4 million customers, residential customers in Europe. So we are deeply involved in that business. By the way, what we just described, and there is also integration to petrochemicals. And I would say what we want to do in the kingdom, we have just announced recently a large expansion of our joint venture with Saudi Aramco, SATORP, which was a huge refinery, very successful projects. I can advise the people that you can invest and trust investing in the kingdom can be very successful. You find skilled people, skilled workforce, more than 70% of Saudization in startup, cheap feedstock, natural resource, so it's fine. We will expand it in a large petrochemical platform with one objective, which is really to contribute to the industrial objective of the kingdom, which means by developing not only base polymers, but also high-value chemical products, which could be the end components, for example, to fiber carbon industry in the kingdom. So we have a strong project, $5 billion with Saudi Aramco, $4 billion of attracting third-party investors. But we will also invest in integration. We will announce soon a retail network in the kingdom together with Saudi Aramco, because there is a growing market and we want to benefit from it. And then there is a lot of sun here. So there is a little dust as well, but a lot of sun. And so Total is deeply involved in the solar business. It's also an objective to invest. So this is the vision that we have for the future of the company. Gas, oil, and low carbon electricity, either from natural gas or from renewables. This is where we want to go.
Well, in the UAE, it seems they've tackled the issue of dust with their solar energy production there. Dr. Sultan, speaking of the transformations that we just mentioned a little bit earlier, ADNOC, it wasn't a transformation, it was maybe a revolution in the last 3 years. Quickly to go through, ladies and gentlemen, what we've seen, a $3 billion first international bond issue. You have put a 5-year capex plan in action of the tune of $110 billion, split equally between upstream, downstream. You've IPO'd a part of your fuel retail unit. You've brought Baker Hughes with a 5% stake in your drilling unit. You've renewed your onshore concessions, your offshore concessions, and there's also the inaugural competitive bidding licensing round. Give us how do all these pieces come together for this overview of the strategy?
And that's only the beginning, Nasser. I can comfortably tell you that this is only the beginning of a long-term journey. We had to accept the facts, and we had to come to terms with the realities on the ground. ADNOC is a very critical organization and institution for the United Arab Emirates. And in order for our economic development plans to continue, ADNOC has to continue to be instrumental in helping advance such agendas by delivering the necessary contributions. So as such, we had to take a step back and revisit the fundamentals. Business as usual had to be completely eliminated and deleted from our dictionary. We had to go back and revisit every single line item as part of our whole business value chain. And as such, we were able to deliver such low-hanging fruits. Those, to me, were quick wins. We have a very rich pipeline of many new opportunities. But what opportunities are we referring to here? This whole transformation was simply centered around one thing and one thing only, and that is a mindset that is commercially and only commercially motivated. When I say that, we had to consolidate, optimize, and make the organization ready for smart growth. Smart growth means that we don't only tap into our own balance sheet. The organization should be very ready to tap into debt and capital when and if needed, given that it provides lesser and cheaper cost of money for the organization, whereby we can utilize our cash elsewhere for better returns. Profitability has become a central piece of how we conduct business in ADNOC. High performance has become a mandate of the organization. Today, we have a very clear responsibility and accountability matrix across the business supply chain. We have reduced our cost per barrel. We have reduced our OPEX. We have reduced our CAPEX. This means more revenue and more profits to our shareholders. This will continue. And we have to accept that there is today a handful of disruptive technologies. We cannot resist those. We have to embrace them, and we have to include them as part of this transformation. What I can comfortably tell you is that we are still at a very early stage of a long-term transformation journey for ADNOC. So far, we have been able to deliver real and tangible results, yet there is much more to come.
Much more. Any surprises you would like to share with us today?
What I can comfortably tell you, everything we're doing is going to be centered around value maximization. So the fact that we just brought in, for the first time ever, Baker Hughes GE to acquire a 5% stake of one of our most precious companies, ADNOC Drilling. This gives you an indication of what kind of partners we're looking for. We're looking for those who are like-minded, those who are going to bring technology, those who are going to embrace transformation and change, those who are going to help us reduce our cost while maximize value and generate more revenue streams, and those who are going to embed new technologies across every single step of the way to allow for us to reduce our drilling time as well as cost and enhance our profitability, as well as ensure that ADNOC Drilling does not continue to stay as an Abu Dhabi company only. ADNOC Drilling is capable and competent and is competitive enough to cater for regional opportunities as well as worldwide opportunities.
You've mentioned valuations and maximizing value for the shareholders. If you look back in 2008, what were the top market cap companies? Exxon, Chevron, Procter & Gamble, GE. But today, the top market cap companies, Facebook, Amazon, Apple, why would investors invest in oil and gas, Your Excellency, now, seeing that they can get more value and shareholder value somewhere else in the new industries, not the old industries of the old economy, but the new economy?
Well, first of all, I think all of us are inspired by the value that has been created to society and to global economy by technology. And just like Dr. Sultan says, we embrace it, we invest in it, and we try to create some of those technologies across our various platforms here in the kingdom, whether it's through the PIF, and we heard earlier from Yasser Rumayyan what they're trying to do, but even what you call brick and mortar companies like Saudi Aramco is in many ways a technology company on its own. It's everything we do has technology, from the drill bit to the processing plants to the marketing to the simulation, modeling to data management and data mining, and the list goes on to, of course, what Patrick alluded to in terms of technologies for renewable energy and lower carbon emissions. So the answer is the world needs all. It needs tech companies that are giving us intangible products, whether it's your Facebook account or Twitter or Google search engine or your iPhone or Samsung device. These are essential parts of our life, but more essential and more fundamental is energy. Look at this room. We wouldn't be able to have this conversation without energy, not only in terms of the electricity and the air conditioning, but also in terms of the materials that everything around us is made of. And that is the base of the pyramid of life. You got food, and then energy is probably right after it. And after that, you have these other tech products that are getting. And I think longer term, an investor, if you look at it just from purely an investor standpoint, everybody wants to have a portfolio approach. They want diversity. Technology, with all due respect, carries more risk. Many of these valuations are based on expectations that somebody will buy the underlying stock.
And the market
at a
usually
higher.
it gets it wrong every now and then.
And every now and then you have these bubbles bursting. I'm not predicting that we have a bubble burst coming up on technology, but as an investor, I would want to put a significant amount of my investments in things that are certain to grow. And I know as an energy expert and professional that have spent 35 years of my life managing energy, that one thing for certain, it will continue to grow and it will continue to command a significant part of disposable income of people and companies and countries. And it's a steady flow for companies that choose to invest in it and for investors that choose to finance these companies.
Our time is up, but I won't let you go without a question on the market, because what we've seen today, I can't let you go, Your Excellency. What we've seen today is that, the production cut deal is dead. Everyone is producing up to their maximum ability, maybe not Saudi currently. So what are we expecting at the OPEC meeting this December with the new charter to be adopted for the super OPEC, maybe, the new oil central bank? How are you going to go after December?
Well, I think procedurally what we're hoping to do is in December to basically ink an agreement amongst at least the 25 countries that are signatories to the current agreement. Hopefully more countries will join. And it will become an open-ended agreement to continue to monitor and work together to stabilize the markets. This is the objective of the agreement: monitor and stabilize. We think we're in a good place today in terms of supply-demand balances, inventories, but like you said, we have essentially in June lifted the ceiling on countries and said, produce as much as you can. We want to bring production back so that we don't have the anxieties that existed in the middle of the year. And our strategy worked 2 years ago when we pulled production to bring stability back, and I like to say that it worked the last few months by easing production and removing anxieties about a looming shortage. We have to continue to monitor the market the next 2 to 3 months, and for January and beyond, we will decide if there are any disruptions from supplies, and especially with the Iran sanctions looming, then we will continue with the mindset we have now, which is meet any demand that materializes and ensure that customers are satisfied. If, on the other hand, supply starts increasing and inventories continue to build to where we get worried about repeating the 2014 scenario, then we will have the mechanism in place to reconvene and quickly rein in production and bring supply-demand imbalance and prevent inventories from growing uncontrollably. So I think my answer is it depends. We will monitor. It's a very unpredictable situation from supply in particular, but demand is also has its uncertainties with the trade friction, with the developing countries' currency issues. So we're watching constantly, and what I can assure people is that the producing countries are pretty much aligned that what we have done the last 2 years was for the good of producers and consumers, brought the investments we talked about, brought confidence, and we're not going to let it slip from our hands so easily. So we intend to stay the course.
Caution central banker talk here. Thank you, ladies and gentlemen. Thank you, our esteemed panel, Mr. Patrick Pouyanné, Dr. Sultan Al Jaber, Your Excellency Khalid Al Faleh. Thank you so much. Thank you for it.